Welcome back, and joining me for a closer look at what's played out on the market scene today is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. Nice to see that the markets are still in the green. I am worried though about that rand that has gone above 19 rand against the US dollar. Is there anything that has come to the fore that is bothering the rand at this point? Anything that's clear?
I think it's more of a dollar play more than anything. We've been seeing the US dollar struggling, but now with the pause that we've been seeing when it comes to tariffs, some concessions here and there, people think that, okay, maybe the inflation won't be as bad as maybe we initially thought, and probably the US Central Bank might carry on and still give us those two cuts, because we know when it comes to the employment side of things, the guys have managed to deliver on their mandate. The issue continues to be inflation. So I think markets are getting a bit of consolation from that. But I think generally this rally, whether it's stocks or whether it's commodity growth sensitives, commodities which are sensitive to growth, I think we continue to be skeptical. And one should expect that for the short period of time, we should expect to see the stocks trading in a very wide range, but being very volatile. And maybe the issue with bonds in that they've been rebounding, at least you're not going to get, because there was a possibility that it could be another hit to economies, because most loans were going to go up when it comes to the repayments part of. So I think that bit of consolation, and the guys, maybe sanity will prevail very soon. Unfortunately, we don't know how soon.
Yeah, would you say that investors are also still on tenterhooks here? Because as much as they were trading on that tech tariff exemption, but now we're having the Trump administration saying that they're embarking on an investigation on the impact of semiconductor chip and electronic devices imports. Could that maybe see some uncertainty and jitters creeping in at some point, maybe sooner rather than later?
Yes, we continue to be jittery, but remember, we're also cheering up the fact that there's a possibility that there can be some modification when it comes to that 25% tariffs, when it comes to auto vehicles. So I think that is also helping. But unfortunately, on the other hand, you get China telling the airlines there that, hey, stop buying any parts coming from Boeing. So meaning it's also increasing the heat from that other end. And talking about China themselves, we know their president is busy visiting those 3 Asian countries, and today they're in Malaysia, which is a very important one, because Malaysia happens to chair that 10th block, trading that those Asian countries have. And we all know it's more about bilateral trades, relationships that is trying to promote.
Yeah, well, the U.S. consumer seems to expect inflation to tick up in the near future. That's according to the Fed's latest survey of consumer inflation expectations. And I'm wondering how much influence that could have on the thinking of the Fed from here on out.
And remember, that's before having these concessions that we just spoke about. But yeah, generally, it has been expected that basically tariffs are increasing prices. Remember, we've seen people flocking trying to buy iPhones, before the tariffs kick in. So people expect prices to generally go up. And if it gets to materialize, and I don't think their interest rate decision should be based on the survey, but it should be based on the actual data, of how is it doing when it comes to inflation. But I think, as they indicated even the last meeting, that the guys are not in a rush to start cutting interest rates. They also want to see how these tariffs policies pan out.
Well, Makwe, it's quite interesting because we've seen the woes in the global economy, that the luxury or the higher end of that consumer income bracket is not immune to the headwinds in the economy, as we had seen with LVMH's first quarter results, with the sales there declining when investors had expected a growth. Just talk to me about the biggest worry that has come from markets out of these results.
That the guys, we know they're making better part of their money from Asia, China more specifically. Consumers, they are starting to say, okay, let's wait and see. Maybe we don't have to start going ahead and spend money, but we have to be careful here about the high income earners, because that 1% they're immune to what is happening. But these goods are not necessarily bought by the 1%, are bought by the middle class to a little bit to upper class. So those people want to make sure that they take off their finances, and it was bound to happen. Guys, you cannot forever buy luxury goods. That bag is, you cannot buy that bag every 3 months. You can only buy it and keep it, whether it's shoes or whatever. So for
Yeah.
me, I'm saying there should be this thing seen as more of seasonal more than anything.
All right. Well, Makwe, what are you placing your bets on in this economic environment? Your stock pick for today?
I think medium to long term, I think Sasol should do okay. Very attractive yield of around 5.2. And I'm saying with sanity prevailing medium to long term, then the economy should start to do okay. We expect more stimulus coming from China. Sasol themselves, they've got a plan as well for us back on here when it comes to the possible shortage of gas. So I think they should benefit from that. And I'm saying at these levels, I see that as a reasonable price for one to probably start looking into getting some.
Amazing. Thank you so much for your time and for your insights on what has moved investors' money today, Makwe. That was Makwe Masilela from Makwe Fund Managers.